WTF. Is it time to get out of cash? Because this chart's about to break out. And this is very notable because credit so far this year, well, a lot of it is red, including investment grade and US Treasuries. Simply put, the TLT is down by roughly 4% so far this year, where the S&P is up by nearly 15. And if we listen to old wisdom of the 60-40 portfolio, it's supposed to give you half the volatility, but it's supposed to give you really good returns over the long term. Well, I don't know about you, but when I look here and I see plus 15% and I see -4, that's not really helping with volatility. And this is a major issue because we currently have $6 trillion basically sitting in cash. But whoa, we probably need a little bit more evidence. All right, Jerome, that's exactly what we're going to do now, and we're going to play a clip. Let's go.
Potential upside. They believe that the S&P has even greater upside. Josh Brown, where do you stand?
Look, I have a message for everyone watching this. If you want to know what professionals are, or at least should be telling clients right now, it's very simple. Get out of cash. Get out of cash. If you have money that you're not using next year, later this year, tomorrow, and it doesn't need to be that liquid, you have a 3-year, 5-year, 7-year time horizon on that pool of money, I want you to consider extending duration. I'm not asking you to take credit risk. You could do this with treasuries, no problem. But you are going to now see rate cuts. You're seeing softening in the data. The rate cuts will be justified. I'm not saying you're going to see some sort of like massive economic turndown, but I think your days of 5.5% yields risk-free are coming to an end. I don't know the exact date. I don't predict interest rate moves, but it feels very likely to me that the smarter bet, if you look back 5 years from now at a portfolio, the smarter bet will have been to extend those durations, accept less overnight yield, but have that runway so that you're earning more over time. We did this for clients between February and March across all of our asset allocation models. It was the first time we had shifted back into fixed income from cash since 2020 when we went the other way, when you weren't being paid for duration at all. You're about to be. It's not tomorrow, but it's coming. So I want you to start thinking about that strategy. I think the markets are getting it. State Street is out with some research this morning talking about ETFs. $90 billion came into ETFs in May. That is roughly a third of all of the inflows for the year coming in 1 month. Remember selling May? Nobody listened.
Yeah.
It went the other way. Of the 90 billion that went into ETFs, 60 billion went into equities, but 30 billion went into fixed income, because I think the message is starting to hit home that this is not going to be forever. So that's where we are right now.
All right, that's it for this clip. So I think Josh Brown makes a really good point here. And what I want to do is really elaborate on what he's saying here. So if we look at Bill, which is basically the T-bill you can get on short-term treasury bonds, it's currently 5.2%. When we look at TLT, it's currently at 3.94%. Remember this chart that I just showed you? This is TLT. It's the 20-year bond. That's basically what Josh is talking about. Not only are we about to break out, you might be able to extend duration and get paid for longer. That's really what I heard him say. The other thing I really heard him say is that he's looking for a bit of a downturn or a reason for rate cuts. When I look at this image, that's exactly what I see. I see CPI or inflation going down, and I see unemployment going up. Remember, the Fed has two jobs. It's inflation and full employment. Well, this says it's time to cut, at least in my opinion. Please also remember that when it comes to the end of the quarter, people do something called window dressing. And let's think about this. For the last 3 months, what's been working? Well, it's been pretty much the three biggest blocks: Microsoft, Apple, Nvidia, Google. Everyone's going to pretend like they had this. That's what window dressing is. At the end of the quarter or in 2 weeks, people are going to design their portfolio to appear like they actually did better than they did. They're going to pretend like they own these things the whole time. So what does that really mean? Well, it means that right now, GDP is strong, at least for the St. Louis Fed for the second quarter at 3.1%, and we're currently in fear. This seems like a Goldilocks scenario, and we talked about this before. And remember, this also matters because on June 14th, only 2 days ago from the date of recording this, basically on Friday, Goldman Sachs boosts their S&P target to 5,600, which is now right around that street high. And remember, We're going to come back and look at this a little bit later. So they're saying it's on upbeat profit outlook. Please make sure you stay tuned because we're going to go through that. Now would be a great time to consider smashing that thumbs up or subscribing to the channel. Thank you very much ahead of time. Evercore ISI is also upping their S&P target to 6,000. They were previously on the lowest, one of the lowest on Wall Street, and now they're hopeful on AI. Whoop! All right, Jerome, I sign off on this message. So what do you say, Jerome? Yep, I think he signs off. All right, that's it. Job's done. No, of course the job's not done. So the bulls have faced many tests, and they've passed all of them. That's why we're currently at record highs. But let's think about this. Next week, we're going to face new tests. We're going to have European CPI, U.S. retail sales. We're going to have a Bank of England rate decision, and then also Fed monetary policy. We have all this summarized for you. Something else to be mindful of is that as we go into the later part of the month, we have an NVIDIA annual general meeting, a presidential debate, and a French election. So that might be a great time to subscribe and get all of those videos because I will update you on all of them. So if you're wondering what to do right now, you're probably like a lot of people. So let's continue the story. It's really about NVIDIA and really about Apple and really about Microsoft. Why? People are going to feel like they pretend like they own these things the whole time. Could that explain part of the reason why Apple's just been on a mega big boom lately? Look at those fat candles. This is one of the biggest companies in the world. Apple did nothing for a very long time. And now suddenly everyone's like, oh my God, Apple's good. What could be the reason? Well, I think it could be window dressing. And remember, short sellers are also in danger of extinction. Short interest is currently at a 2-year low. Man, it's not paying to be bearish. But remember, Goldman Sachs raised their S&P target based on the growth outlook, right? What do we see here? Big tech profit growth expected to slow. Oh, so why does that matter? Well, it matters because big tech is driving the S&P rally, but we need the rest of the market to step up soon. We need to see broader participation. Yes, things like discretionary need to be picking up the slack. Otherwise, we're not going to hit those numbers. Energy, materials, consumer discretionary, industrials, financials. That's what we need. And AI's boom secret winner, well, it could be the companies that are expected to power it, which means power consumption. Seeing an article even from today. New Silicon Valley data centers will ramp up electricity use. AI is causing a major demand spike. So if we think about the constituents of the consumer discretionary, which we just talked about, that's Amazon, not currently in all-time highs. Tesla, way down in the dumps. I will talk about that one in a second. Home Depot, McDonald's, Booking, Lowe's, a lot of company out of favor. Starbucks, Chipotle is doing good, but a lot of these others aren't. There's room to pick up. So as we look at window dressing into the end of the month, I think it might provide a great opportunity because a lot of people are overlooking other sectors that will have to participate if the market's going to go up. So it looks like it's a Goldilocks scenario where until we get an equal and offsetting force, we're probably just going to keep going higher. And Jerome Powell is laughing because he looks so smart right now. Remember, back to 1995, the Fed cut once, then held for 3 meetings. Well, if it's 1995, we don't actually want them to cut many times. We don't want to see those big declines that usually come after the first cut, 30 to 50% decline. And Kashkari a couple hours ago just said it's reasonable to expect in December. Cool. So it might be 1995 or we're going, gone. Jerome Powell is laughing. And remember, the stock market is a device for transferring money from the impatient to the patient. And we're likely going to be getting another boost to crypto because the spot ETF for Ether should be approved sometime in the summer. All right, that's it for today's show. So if we think about Tesla, they have an event coming up here. So Apple had their big WWDC and everyone's like, oh my God, that's right. Apple's actually really good. We need to own it. We got to force buys, right? We got to drive the chart higher. All right, well, let's fast forward to August 8th. And it's supposed to be a lucky number in China. So he's looking to make them happy. But let's think about Tesla here because let's pretend Tesla reveals this big thing about robotaxi. You're going to say, well, if there's one guy to solve it, it's not Elon Musk. Or you're going to say, yeah, if there was one person to solve it, it was probably Elon Musk. Well, that could be another catalyst for discretionary, but also for big tech, the Magnificent Seven, AI. Oh my goodness, this looks like it could be the big one. And what's so notable here is that we have an engulfing candle on the monthly. So if we manage to get back above last month's high, currently at 18756, this looks really good. Additionally, on the weekly chart, we do have a bullish engulfing candle as well, but we failed to close back below. So I'm quite optimistic on where we could go from here. But if you want to support the channel, please consider smashing that thumbs up, or maybe you want to subscribe and hang out with me at 9:15 a.m. on Monday. Thank you so much. I'll see you on the next video.